Right, folks, we're going to do a quick market review here. It's an opportunity to take a look back at what has happened in the market. And I think it's one of the best learning tools you can have, especially in a live trading environment. Why were certain trade decisions made? Why were other trade decisions not made? Why perhaps Michael took a trade that I didn't take a trade on, and vice versa. And by now, you know that if you've been following along with us, you know that we compare and contrast the Able Trend charts with the bar charts. I'm a big fan of bar charts for solely for the purpose of keeping in perspective what the big picture, kind of the broad view of the market is on these three indexes. So what I want to do is to share with you, and Michael, you feel free to jump in here if you want to, but share with you what we're seeing on the 3 9-minute Able Trend charts. Now, these are the charts that we make our trade decisions on 99% of the time. On the NDX on the left, we see that we are double stacked to the downside on the 3 9-minute charts. We've got 9-minute resistance. We've got 3-minute resistance. The green bar is traded above 3-minute resistance a little bit. That doesn't mean that we will not go lower, but we need to be alert to that and pay attention. We could pull all the way back up to 9-minute resistance, but you can see that there is a declining pattern. If you just take a look at the highs, it's in a declining trend. That's exactly right. Michael's moving his cursor across those highs, showing you that we've established highs, but they've been lower highs. So we have an overall declining pattern, and we also have a set of lower lows. So if we were to pull back up to 9-minute resistance, that might be a good entry point to buy a long put. To open a declining bias spread. It could be a call credit spread, or it could be a put debit spread. But that is potentially setting up for a good signal. If you look at SPX, it is showing a similar pattern, except that SPX has pulled right back up to 3-minute resistance. So we're double stacked to the downside, meaning that we've got 3-minute resistance. Those are the small red dots. And we've got 9-minute resistance. Those are the big red dots. And that just means that we are seeing a double indication that there could be some additional movement to the downside. One of the other things that I'm seeing here is that once we started moving lower, we did what's called a stair step lower, where the 9-minute dots stair stepped lower. The last three are actually moving lower and placed at a lower price level than the first 2 9-minute dots, and then the 3-minute resistance is also stair stepping lower. Those are all varying degrees of indicators that either give me more or less confidence in taking a trade. When I see a double stacked pattern to the downside that's stair stepping lower, I like that. If I see a double stacked pattern to the upside that's stair stepping higher, that gives me more confidence than just a flat set of signals that really is indicating that the index isn't moving very much. And then RUT is starting to shape up a little bit. It is double stacked to the downside. We're going to wait for the next 3-minute bar to form and see whether 9-minute resistance prints again. But as of right now, we're double stacked to the downside. There we go. We just saw 9-minute resistance print again. And what's interesting is 3-minute resistance, as of right now, also printed and stair-stepped lower, which could be an indication of additional movement to the downside. So those are the charts that we use to make our primary decisions. Now, we use different time periods with Able Trend, and I'm not going to go through all of them right now. These are the 3 9-minute charts. We also use 5:15 for a short time period signal to get into a trade or maybe exit out of a trade. And then we have longer time periods, which are 30 and 90 minute, 60 and 180 minute, etc. And those are views that give us a bigger perspective on where we might be headed overall. So what I'm going to do now is I'm going to pull you over to my screen, And I'm going to now share with you what I view as the big picture perspective on these indexes on a bar chart. All right, so you should be able to see my bar chart now. And what I'm showing you is the 10-day, 10-minute NDX chart. Now, last week when we were talking about this, we were trading in this pattern here in a fairly shallow range, about 65 points for NDX. That's a fairly shallow range, but you can see where we cycled down, we cycled up, cycled down, cycled up. And each of these cycles, when they've concluded, have been identified by establishing either a natural level of resistance where price point moved higher and all the price points previous to that were lower highs and all the price points after it were lower highs. And then on the low end, we established a natural level of support where all the price points leading down to it were higher lows and the price points leading away from it were higher lows. So we had this pattern, and then today we had a very strong movement to the upside at the open. But as frequently happens with the indexes, there can be a very strong movement and then it just stalls out. In this case, we had a very strong movement to the upside, and what ended up happening is we formed a natural level of resistance. Now, once we broke above the prior level of resistance that I had identified last week, I don't know where we're going to go. I don't know if we're going to continue to go up to 4,500 or higher, or whether we're going to stall out at some point. So this is an area where you have to exercise patience. And this is a very, very strong test of you being able to set aside all of your emotions about what's going on and rely strictly on your charts. In this case, I wanted to wait and see what the market was going to validate for me. And in this case, as you can see on the 10-day, 10-minute chart, we moved up to a strong line of resistance. Now, not because that line is drawn there, I actually identified that line after we established a natural level of resistance. That natural level of resistance occurred at 11:10 a.m. And that's because all the price activity leading up to it had lower highs, and all the price activity leading away from it had lower highs. So there's a natural level of resistance. Once that formed, what I did was I took a look at whether or not that natural level of resistance ties to any previous natural levels of resistance, and it did. It tied back to this whole period back here in early June. It was on the 9th of June, and back to the 8th of June. So I've got these key natural levels of resistance, 3 areas of them that tie into what happened today, and the corresponding parallel support ties into our natural level of support that was identified on our more narrow channel or cycle. So once we got to this level, I started to see that there might be an opportunity to go short, but I wasn't going to take a short position based on this. I wanted to take a short position once the Able Trend charts, my 3 9-minute Able Trend charts, which I just showed you, identified it was now time to buy a put or open a declining bias trade. And I have more confidence taking that trade because I know that my macro view of the market has just identified a natural level of resistance, which generally is going to indicate a declining bias. Now, I want to be very clear here. It doesn't mean that we won't move a little lower and then continue to move higher. So you have to be alert to that, but that's the level of risk that you take when you are trading. Right now, we're in a very tight intraday cycle. Oops, let me just expand that a little bit. We're in a very tight intraday cycle that has its own natural level of support once, natural level of support twice, natural level of resistance as it moved higher. So we're in a very, very tight range in NDX, about a 12-point range right now. If you've traded NDX at all before, you know that that's a fraction of its average daily movement. So it's a very tight range, but it does have a slightly declining bias to it. And you're going to see that each of the indexes is looking to be just about the same here. Here we have a SPX. Let me go back to a 30-minute on SPX. See if that'll come up here. So we had this steeply declining pattern. We broke out above that this morning. What I'm going to do is see whether or not this natural level of support, or sorry, natural level of resistance right here ties back to anything, and it does. It ties back to these two prior declining levels of resistance, and then my one level of support still ties to pretty much the same level of support that we had here before. So just to make it a little less confusing, I'm going to get rid of this more steeply declining pattern. And it looks to me like we could possibly be in this declining pattern. Now, when you zoom in and you look at a 10-day, 10-minute chart, you can see where we hit that natural level of resistance. And I can fine tune this a little bit, make sure I nudge that right up to that resistance. But you can see that then we've traded stepping lower and lower, and that corresponds perfectly to the Able Trend charts. And there have been some good signals in there that could possibly set us up for a great trade to the downside. Now, all of that pattern is sitting inside of another pattern that is a slightly rising channel. So what happens is we start to form this wedge, and eventually we will break out of that wedge. We will either break to the upside or break to the downside. But this longer term channel is a slightly rising channel. So, we could potentially move up to these levels of resistance. But as of right now, the index is telling us that it wants to move lower off of this declining resistance. And it's not sitting out here by itself with no tie to any other price activity. It's actually tied back to what we previously saw as the end of this rising cycle, which was the top price point there, and then the next level of natural resistance here, and now it ties to the activity today. And then RUT is a very similar situation to the other two indexes, where we saw a strong movement to the upside this morning. We actually saw a pretty strong Bollinger Band snap on the 30-minute charts, and then we saw RUT pretty much flatten out, and it was right around in this price level here that we started to see sell signals coming on RUT. And when I saw the sell signal, you have a choice when you see a signal on Able Trend to take a very conservative approach to your trade, or to be slightly more aggressive. Conservative would be you wait for the signal to verify by seeing that the bar is closed and confirming that 9-minute support is not there. I chose not to do that on my trade today. I chose to jump a little early ahead of that. When the sell signal came on the chart, if you were trading along with me, you saw me get into that 1200 put, bought to open 1200 strike put. So I bought to open in the money so that I could actually cover myself if the index moved against me. But I not only saw the Able Trend chart, the 3.9, telling me that there was a sell signal, but I also saw RUT on my 30-minute bar chart showing me a natural level of resistance and starting to move away from that. So a lot of people will want to focus on one or the other. They think it gets a little complicated by looking at two different types of patterns. For me, the bar chart is not my trigger to take a trade. The bar chart just gives me a frame of reference of where we could possibly be trading relative to a longer term pattern. And the Able Trend 3.9 minute or maybe the 5.15 is the tool that I'm going to use to actually decide when to get in. With a reference point to the bar chart, I may choose, like I said, to get in a little earlier than a conservative or ideal entry, but sometimes I jump the gun and I make more money that way. Sometimes I've jumped the gun and I may end up having to manage the trade. But I don't do it willy-nilly. I don't just do it by saying, oh, I see the sell signal on Able Trend, so I'm going to jump in. I do it because I have a point of reference on my bar chart that is helping me understand that we could possibly be rolling over here, and there's a pattern that I've identified that supports that. So the headline today really is follow your charts and not your emotions. You can dissect your charts, you can study your charts, you can look at the patterns, but let the market tell you what it is doing. Let the market tell you when there's a natural level of support or a natural level of resistance. Let the Able Trend charts and the way the market is talking to us through Able Trend, let those charts tell you when the right time to enter a trade is. And there are, again, varying degrees. You might choose to jump a little early. You might choose to be very conservative. And there are so many different levels of decision making in there about how much capital you're trading, how confident you are with what you're doing, how you're going to cover this trade, how much risk you're willing to put on, how many other positions you already have that are directionally biased in that particular direction. All of those things are factors that are going to be decisions you need to make in order to be a successful trader. And we teach the majority of that in our Profit Accelerator program, which is a 4-webinar series. And we teach you a lot about what we trade um, in these indexes, the strategies that we use, as well as the specific technical signals that we follow, or sorry, the technical signals that we follow, as well as the strategies and the technical signals as evidenced by the Able Trend charts. So I just wanted to share that with you. I think it's very important to keep consciously focused on follow your charts, pay attention to your charts. If you're staring at your charts and scratching your head and you have no idea what to look at, then follow along with the type of comments and commentary that Michael and I provide in the live trading room, because we're telling you what we're seeing. We're telling you, Michael's really good in particular about telling you what he's seeing on the Able Trend charts and why this would be a great trade or why he'd sit on the sidelines. And remember, you're never going to be 100% accurate on your trade entries, never. And you have to accept that, and which is why we also teach management techniques and make sure that you can cover yourself if necessary. So I hope that's helpful to you today. Welcome to the live trading room. If this is your first week, we're happy to have you here. We're very proud of the results that we have in the live trading room. And our objective is to make money in our live account. And when we say live trading room, we mean it is live trades. You can see every trade that we're placing in this particular account that we focus on. And you also hear about a lot of trades that Michael or any other members of our team are trading. You don't see their accounts, but we profile one account for you to see, so you can see how every trade is placed, and you can see whether we made money, whether we lost money, whether we had to manage it, and you can follow along with us. So we teach all that in the Profit Accelerator program, but this is a live account. These are real dollars. We are here to trade, and then we are here as much as reasonably possible to help you understand what we're doing, why we're choosing what we're doing. We're not here to convince you to trade anything that we're trading. We're not even here to debate why we did one thing, but you may choose to do something different. Every trader needs to make the decisions that are right for them, right for their capital, right for their risk, right for their own tolerance of what they are willing to put into the market, and right for their level of knowledge. But we share what we do, and we're happy to explain why we did what we did. And I believe very strongly that that's one of the ways that you get to learn and understand. Michael and I have been trading each for over 30 years. I founded Options Moneymaker a few years ago specifically so that I can help traders learn a lot of the types of things that I learned over my 30 years, and I know Michael learned over his 30 years. And Michael and I have traded together for about 10 years, and we understand how each other trades. It doesn't mean we always agree on a trade, but that's fine. He wins on some that I choose not to participate in, and vice versa. That's just the nature of trading. So be open-minded, believe in your ability to learn and become a successful trader. Start with that. And you're going to start to, I think, very quickly catch on to how to trade successfully, how to navigate your way through a variety of markets. We have rising cycles and declining cycles in every index every day, no matter how much financial media wants to try to convince you that the market is either going straight up or the market is going straight down or it's going sideways. You got to look at the detail. Even when you look at a 30-minute chart here on RUT, you can see down cycles, up cycles, down cycles. Even today, if I broke this down to, again, a 10-day, 10-minute chart, we start today strong up cycle. Now we're in a slightly down trending cycle. There are always cycles of movement, and all of those cycles of movements are potential opportunities for us to take a profit. We average approximately $2,400 a day. That's our average since the beginning of the year. In the past 2 or 3 weeks, our average has been a little lower than that. Market has been a little more flat during a lot of the market day, which is fine. We just have to exercise one of the most valuable management techniques available to us, and that is patience. We just need to be patient, and we wait for the opportunities to come to us. We wait for the market to tell us what the opportunity is, and then we take advantage of it. So I hope that's helpful to you, and we will do another mid-market update again tomorrow. And thanks for being here, everybody.